Welcome to Money Makes and Money Breaks, where learning is key to success. Today's episode is an introduction to commodities and markets, exchanges. Section 1. What are commodities? Commodities are raw materials or primary agricultural products that can be bought and sold. Examples of commodities include gold, silver, crude oil, natural gas, wheat, corn, coffee, and sugar. Commodities are traded in global markets, and their prices are determined by supply and demand. Unlike stocks or bonds, commodities are physical assets that can be stored and delivered. Section 2. Why are commodities important? Commodities are the building blocks of the global economy. They are used to create the products and services that we rely on every day, from food to fuel to clothing. Because of this, the prices of commodities have a significant impact on the global economy. One of the most important factors in the price of commodities is supply and demand. For example, if there is a drought that impacts the wheat crop, the price of wheat is likely to go up due to the reduced supply. Similarly, if there is an increase in demand for oil, the price of oil is likely to rise due to the limited supply. Section 3. Types of commodities. Commodities can be divided into two main categories: hard commodities and soft commodities. Hard commodities are natural resources that are mined or extracted from the earth, such as gold, silver, copper, crude oil, and natural gas. Let's take a closer look at some of the most commonly traded hard commodities. Gold. Gold is one of the most popular hard commodities, and it's often seen as a safe haven asset during times of economic uncertainty. Gold is used in jewelry, electronics, and industrial applications, as well as a store of value and a hedge against inflation. Silver. Silver is another popular hard commodity, and it's often used in jewelry, electronics, and solar panels. Like gold, silver is also considered a store of value and a hedge against inflation. Copper. Copper is a vital metal used in construction, electronics, and power generation. It's often seen as an indicator of economic growth, as it's used in a wide range of industrial applications. Crude oil. Crude oil is the most actively traded commodity in the world, and it's used to produce gasoline, diesel fuel, and other petroleum products. The price of crude oil is heavily influenced by geopolitical events, supply and demand, and global economic conditions. Soft commodities are agricultural products that are grown or harvested, such as wheat, corn, soybeans, coffee, and sugar. Now, let's take a closer look at some of the most commonly traded soft commodities. Wheat. Wheat is a staple food crop that's used to produce bread, pasta, and other food products. The price of wheat is heavily influenced by weather conditions, as well as global demand for food products. Corn. Corn is another important food crop that's used in a wide range of products, including livestock feed, ethanol, and food products. The price of corn is heavily influenced by weather conditions, global demand, and government policies. Coffee. Coffee is a popular beverage that's grown in countries around the world. The price of coffee is heavily influenced by weather conditions, as well as global demand for coffee products. Sugar. Sugar is a sweetener that's used in a wide range of food products. The price of sugar is heavily influenced by weather conditions, global demand, and government policies. Section 4. Commodity investing. Investing in commodities can provide diversification benefits to a portfolio, as the prices of commodities often move independently of other asset classes like stocks and bonds. Investors can trade commodities using a variety of financial instruments, including futures contracts, options, exchange-traded funds, ETFs, and mutual funds. However, futures contracts are the most commonly used financial instrument for trading commodities. A futures contract is an agreement to buy or sell a specific amount of a commodity at a specific price on a specific date in the future. Futures contracts allow investors to hedge against price volatility or speculate on future price movements. Options contracts are another financial instrument that can be used to trade commodities. Exchange-traded funds, ETFs, are the second most commonly used financial instrument for trading commodities. This is due to their ease of trading, liquidity, diversification, and lower transaction costs when compared to direct investment in physical commodities. 10 most popular commodity ETFs. 1. SPDR Gold Shares, GLD. This ETF tracks the price of gold and provides exposure to physical gold bullion. 2. iShares Silver Trust, SLV. This ETF tracks the price of silver and provides exposure to physical silver bullion. 3. Invesco DB Commodity Index Tracking Fund, DBC. This ETF tracks the performance of a broad basket of commodities, including energy, agriculture, and metals. 4. United States Oil Fund, USO. This ETF provides exposure to crude oil prices and tracks the performance of West Texas Intermediate, WTI, crude oil futures contracts. 5. Invesco DB Oil Fund, DBO. This ETF tracks the performance of crude oil futures contracts and provides exposure to the price of oil. 6. VanEck Vectors Gold Miners ETF, GDX. This ETF invests in gold mining companies and provides exposure to the price of gold. 7. VanEck Vectors Junior Gold Miners ETF, GDXJ. This ETF invests in smaller gold mining companies and provides exposure to the price of gold. 8. iShares U.S. Oil and Gas Exploration and Production ETF, IEO. This ETF provides exposure to companies engaged in the exploration, production, and development of oil and gas resources in the United States. 9. iPath Series B Bloomberg Livestock Subindex Total Return ETN, COW. This ETN tracks the performance of a broad basket of livestock commodities, including live cattle and lean hogs. 10. Aberdeen Standard Physical Palladium Shares ETF, PAL. This ETF provides exposure to physical palladium bullion and tracks the performance of the price of palladium. Investors should carefully research each ETF, including its fees, performance, and investment strategy, before investing. Section 5. Markets, Exchanges. 10 markets and exchanges for investing in commodities. Chicago Mercantile Exchange, CME. Trades futures and options contracts for various commodities, including agricultural products, energy, metals, and financial products. New York Mercantile Exchange, NYMEX. Trades futures and options contracts for energy commodities, such as crude oil, natural gas, and gasoline. Intercontinental Exchange, ICE. Trades futures and options contracts for various commodities, including energy, agriculture, and metals. London Metal Exchange, LME. Trades futures and options contracts for metals, such as aluminum, copper, and zinc. Shanghai Futures Exchange, SHFE. Trades futures contracts for various commodities, including base metals, precious metals, and agricultural products. Tokyo Commodity Exchange, TOCOM. Trades futures contracts for various commodities, including precious metals, energy, and rubber. Multi-Commodity Exchange of India, MCX. Trades futures contracts for various commodities, including energy, metals, and agricultural products. Dubai Mercantile Exchange, DME. Trades futures contracts for crude oil. Singapore Exchange, SGX. Trades futures contracts for various commodities, including energy, metals, and agriculture products. Bursa Malaysia Derivatives, BMD. Trades futures contracts for various commodities, including palm oil, rubber, and crude oil. Online trading platforms offer investors the ability to trade commodities from their computer or mobile device. Here is a list of online trading platforms. 1. E-Trade 2. TD Ameritrade 3. Interactive Brokers 4. TradeStation 5. Charles Schwab. 6. Fidelity 7. Robinhood 8. Ali Invest 9, Webull 10, NinjaTrader 11, Saxo Bank 12, IG Group 13, Plus 50,000 14, AvaTrade 15, XM Group 16, CM Trading 17, FXCM 18, Pepperstone 19, OANDA 20, City Index. These platforms often provide real-time market data, research, and trading tools to help investors make informed decisions. It's important to research each platform carefully and consider factors such as fees, commissions, trading tools, customer support, and regulatory oversight before choosing a platform to trade commodities. It's worth noting that there are many other regional and local markets around the world where commodities are traded. Additionally, some commodities are traded over the counter, OTC, between private parties, rather than on a centralized exchange. Just know that OTC trading can be riskier than trading on a centralized exchange, as there is no clearinghouse to guarantee settlement and counterparty risk can be higher. Therefore, it's important for parties engaged in OTC trading to conduct thorough due diligence and risk management. I hope you enjoyed this video and please keep tuning in for more content. Thanks for watching.